And here we go. Hey guys, this is Martin Perdomo, the elite strategist on Latinos in Real Estate Investing podcast. And today I have Keith Raynor from Horizon Property Management Group. And I met Keith some time ago as my partner Danielle, Dr. Danielle, she has a small portfolio out in Baltimore, Maryland. And we are looking for some assets in Baltimore, which Keith and I were just talking about before we got started. We are looking for some assets in Baltimore. And quick story. So Keith, Danielle and I went out there in the middle of COVID, right in the middle, right? Keith,
right in the heart of it, right in the heart.
When was it? It was like April, right? The beginning of April.
Yeah, it was probably the second week of April, sometime just after they shut everything down. So yeah, not long after.
So we were like, talk about taking action, right? My partner and I, we were like, okay, we're just going to wear our masks and we're just going to go there. There was this asset that we were looking at. And how big was that asset, Keith? 45 units?
Yeah, it was 45 units. Yep, just shy, right around 45.
45 units, and right in the middle, dead smack in the middle of the hood. And so here's one of the reasons why I have Keith here, and I really like Keith. So Keith went out there with his team. We were there with the broker. He has an asset close by there that he manages. And we were done with that asset. We went to look at another asset. He gave me some other assets for my partner Danielle and I to go drive by. And we got on the phone with Keith, and Keith was like, you know what, guys, I don't like that asset. It's not a good asset. And that's the kind of people you want on your team, right? So real estate is a team sport, right? Real estate investing is a team sport. And the most important member of your team is your property manager. Your property manager will make you very wealthy or will bankrupt you, period.
Hopefully the first. Let's go with the first, not the second. Yeah.
Yeah, that's right. But that's facts, my friend. That's facts.
Yep.
So Keith, Keith was honest with us and he told us, don't like that asset. So we looked at a couple of things. So anyways, Keith, welcome to the show. And
Martin, thank you for having me. Really appreciate the opportunity and looking forward to our partnership and continuing your exploration and investing here in Baltimore. It's exciting for sure.
So yeah, I want to talk about Baltimore, man, because we're still in this COVID thing, and my property manager here locally to my assets here in Pennsylvania, she spoke to my wife yesterday, and my wife tells me this morning, Casey told me that in Wilkes-Barre, in that area, in that town, they were going to go back to yellow, so they're going to go back to yellow phase, so they're going to close down, they're going to pull back again from green to yellow. Yeah. And so, I don't know what's happening in Baltimore, man. Baltimore's in the news all the time. And so let's first start, before we go into Baltimore, because I want to talk about that.
Yeah, we can spend days on that.
Give us a brief history on Horizon Property Management.
Yeah.
Tell us a little bit about the company and tell us about yourself, a little bit about yourself.
Absolutely. So again, thank you for the opportunity on this show today, Martin. Really appreciate it. And for anybody listening in, appreciate your time as well. Hopefully you see some value in this. And if I can help with anything, please reach out and get in contact. So a little bit about myself. I am the general manager, director of business development for Horizon Property Management. And Horizon Property Management is, I hate to say, a relatively newer third-party management organization in Baltimore, but we are. We formed in 2019. However, where we come from, our parent company, Gebhardt Properties, has owned and successfully managed its own assets for over 75 years. And when we looked at our business model and successes history as a whole, we said, hey, we should really start to expand this out to third-party owners and investors, because at the end of the day, our owner, second generation, he's constantly investing back into his assets. And we as an organization had to monitor that, manage that, just like we would do for a third party. So we decided to extend our, again, experience, wealth of knowledge to third party investors such as Dr. Danielle, yourself, Martin, any other owners that we work with. And we've really seen we've been fortunate enough, through all of this to see a great growth. And really people recognize, and when I say people, owners, investors, one-offs, whether it's part of syndication, whatever it may be, they recognize that we're not just out to just put our name on the front of a building and say, hey, managed by Horizon Property Management. We really take a consultative approach to everything that we do. And the reason we do that is because I want to align our goals with your goals, and really for the big goal there is future growth. if we're helping you grow, you're helping us grow. So let's make it a partnership from the very beginning. Let's set expectations. Let's align these expectations. And then we need to do that throughout the process of partnering together. And, you know, our parent company, Get Our Properties, they've done a great job with that. People, they know the name in the Baltimore area. We have shopping centers. So if anybody's looking at commercial space or just straight garden style apartments, or even a 4, 5, 8 bedroom unit, we're equipped to manage everything. The only difference from going from a large garden style community to various smaller in this mid-market is just the geographic reach that you have to spread out and hit each property. And we set our business model up to accompany that. We knew that Martin may have a property on the east side of the city. Dr. Danielle may have a property on the west side of the city. We set our teams up to where they're regionalized, where people can make sure that they're hitting all maintenance calls, leasing, you know, fire on all cylinders every day. So again, relatively new in the third-party management side, but we've been doing the owner-managed stuff for over 75 years now, and it's just it's exciting. It's neat to work with all the different personalities, properties, the challenges. Every day is something different, and it's, you know, I have a phenomenal team behind me that supports my message to owners and investors, and the biggest thing is we never want to fall short in the commitments that we're delivering or making to anybody we work with.
That's perfect. I mean, you couldn't have said it better. What are some of the biggest challenges you are facing in the Baltimore market with all the drama that's going on across our country?
Yeah.
But in Baltimore specifically, you know, we see it all over the news, like I said a moment ago. What are some of the challenges that you're facing there?
You know, it's funny, and I don't want to say it's funny you asked this. We had this conversation yesterday. It was actually me, my COO, and my CFO. We had this exact conversation, and Dan Smith, our CFO, asked the question. He said, have we had a lot of people leaving our properties in the city due to the unrest that's going on around the country? And the answer is nobody's ever came out and said, hey, we're leaving because we feel unsafe in Baltimore, which is phenomenal. I mean, that's great. Now, I'm sure if you peel the layers back a little bit, you're probably going to get somebody going, yeah, you know what, I just didn't feel comfortable in the city. But as a whole, you know, I look at what's going on and we're focusing on the Baltimore city, but that can happen anywhere. You know, you could have a community in the county, in an urban or a suburban setting or something like that, that it's going to happen there as well. So we haven't seen a lot of tenants leave. You know, there's always the question, you know, hey, what's going on with Baltimore? And the biggest complaints that we get from Baltimore are the taxes and the water bills. You know, outside of that, but they're out of our control. You know, outside of that, we really don't get anything. It hasn't been as a deterrent as we thought it was going to be. You know, COVID shut things down. It slowed things down. We had some delinquencies there. But again, with communication with tenants and everything like that, we've kind of minimized that to a certain degree. So, you know, to answer your question, as far as Baltimore City and what are we seeing there, there's a lot of strong investment opportunities. There's a lot of neighborhoods that are still to be, you know, that up and coming trend. There's opportunities that have already been developed and you know, revitalized, but they still have opportunities there as well. So from an investor standpoint, you really have to ask yourself and, you know, have a look in the mirror kind of conversation and say, where do I want to be and what kind of asset do I want to invest in? And then from there, you kind of proceed forward.
Got it. And that's really good. So how have you guys, you know, these are important questions for us as investors. So how has Horizon dealt with in your team? And by the way, I think you have a great team there. I met a couple of your guys and your team. How have you guys dealt with the delinquencies? Or did you guys see a spike in delinquencies there? You know, and what's happening when you look at a city like Baltimore, where and not to get political or anything, but it just is, right? As investors, as seasoned investors, we there's certain things that we look for, right? So we want to go into investor friendly cities, landlord-friendly cities and states, for the obvious reason.
Yeah, absolutely.
Right?
Absolutely.
It is what it is.
You're not doing your due diligence if you're not paying attention to all aspects of the investment. And that's political, financial, economic. So you have to look at all different aspects in that whenever you're taking
all of that stuff.
Risk. Amen.
So what has that process been like for you with all this chaos in terms of, have you found a spike of people trying to take advantage and work the system in your city? From an investor's point of view now, I'm just talking, you know, as an investor, have you found that there has been a spike in terms of people trying to take advantage of the system? And I know you and I talked and you told me that the city of Baltimore, you and I and Danielle and my partner talked, and you told us that the city of Baltimore is not allowing any evictions until August 31st. Now that's from March guys. That's from
Correct.
March to August. That's a big chunk of our net operating income. I mean, that's a big chunk. So if someone wants to take advantage of that, they can. Have you seen a spike? So there's a two-part question. Have you seen a spike and have people trying to take advantage of that? And how have you guys what has been your strategy to deal with that kind of stuff as a business, as a property management, professional property management company?
And great question. And, you know, as far as those taking advantage, you're going to get individuals taking advantage of situations anywhere. So whether it be Philadelphia, Miami, New York, Chicago, San Diego, that's going to happen anywhere. What we did at the beginning of this, and you know, we work very closely with MMHA, which is the Maryland Multifamily Housing Association. We work very closely with them. Our parent company does. We have regular contact. They're a phenomenal resource. And, you know, they send out daily updates, weekly updates as well. When we got a sense that the, you know, Pennsylvania and surrounding states were starting to go into a kind of a red or shutdown, and they're kind of backing off and restricting things. We started communicating with tenants, and communication was the biggest key here. And we let tenants know that, hey, if you are going to go into economic hardship, you need to communicate with us. Let us know. Provide us with some kind of documentation, a letter from an employer, a copy of a pay stub, something along those lines that says, hey, I am actually out of work. I'm being impacted by COVID. We did see a drastic spike. You know, initially you saw a big wave of those that were in the hospitality industry, service industry, different things like that did lose their income. So actually, naturally, you know, it wasn't the first month in March. You know, we really saw it in April, more so in May. June was kind of started picking back up. We started to see the spike kind of trend down a little bit. I know when you and Dr. Danielle and I spoke the other day, you asked her, you know, what was our delinquency rate currently? Right now, we're around 14%, which is pretty good. Considering that we went through, you know, that we went, exactly, you know, we were happy with that.
In that city too.
Exactly. Now we do have there is an outlier property that you mentioned in the beginning here that does have a little bit different. It's a little bit different of a percentage. It's a little bit higher than where we are as a whole portfolio. But there's been some ongoing problems with that property since the beginning of management. So we can cross that bridge a whole nother time as far as how do you restabilize a property. Maybe a good opportunity again in the future. But you know, as far as the spike itself, we did see a spike. It did kind of minimize down. Now we were looking at communication. You know, tenants communicating with us. My team members were reaching out to all of our tenants on a monthly basis. So everybody reached out to them. Hey, what's going on? Are you back to work? Do you have anything? Can you make any payments? That communication really helped us, one, establish even a stronger rapport with the tenants that we work with. It created a higher level of trust, and not the sense that, hey, my landlord, my management company is just out to gouge me. They just want my money. But hey, they're actually working with me. They're complimenting and they're helping me through this process that everybody is going through. So it really differentiated a lot of the other companies than you know, maybe they were doing this, maybe they weren't. But I do think, you know, if we're sitting at 14% today, that's all kind of paying tribute to what we did to in the very beginning. You know, we do have tenants that, you know, I know they were out of work. I know people were on unemployment. We know people received the severance checks or whatever you want to call them. Excuse me, lost my train of thought on that. But, you know, people received all that. Whether they use that for rent or not, we can't, you know, we'll never know. Human nature, we can assume that some did and some didn't, but that can happen anywhere. So, I can't really answer specifically where there are people trying to work the system in Baltimore, because I think that could be a national, global, whatever it may be, type of situation. But we did see a spike, and I think we handled it in the most appropriate way that we could with communication. I think that was key.
Yeah, that's key. I want to switch over real quick to what should we look for in a PM, and what is a good owner for you, right? So it's vice versa, like I said, right? So the most important person in your team is your PM, but it's vice versa, right? It's not just, hey, I need to have a good PM. Also, the PM, you need to be a good owner. You need to be a responsible owner. So what does a good property management company feel like, right?
Yeah.
And what does a good owner, what does a good owner behave like? Like, what does that look like too? Because there's also that perspective, right?
Yeah.
There's two sides to every story. So how do you make how do you get that symbiotic relationship to work really well, Keith? What are you looking for both sides?
That's a great question, and you hit the nail head on it. It's so two-sided, and really the biggest thing from our perspective as a management company, business, partnership, relationship, whatever you want to refer to it as, is you have to have a commitment to this partnership from the beginning. So if there's any distrust or there's any uncertainties, you need to address that right out of the gates. You need to make sure everybody is on an equal playing field. And it starts with kind of a commitment to partnership. Hey, we're in this together. We both have the same goals. But when you really dig into that, what does that look like? It all starts with aligning the expectations. So day one, you're going to take over management. We're going to align expectations. These are our expectations of you as an owner. This is what your expectations of us should be as a management company. You need to have a really good understanding of their goals. And goals, we can look at it in so many different ways: short-term, long-term, mid-term, whatever you want to call it. But you need to understand the goals, because we work with various owners. Some owners are, hey, we just want to go ahead and have our assets be secure, stabilized. We have other owners that, hey, we want to grow NOI. We want to do X, Y, and Z because we want to then reinvest into the next property not long down the road. So you have to have that understanding, and it's really dynamic, and it may be flowing as well. It may be one of those things to where day one, an owner says, hey, you know what, I just want to have a stabilized asset. I want to have my distribution check each month, and it's going to help me have a supplemental income. And then a couple months down the road, he or she may go, hey, you know what, this thing is great. You guys are performing well. We're increasing the renewals 3 to 5%. Rents are increased. Our maintenance costs are down. You know what, I have some cash in the bank. I want to start to roll that into a new property. So you have to revisit these goals and these expectations. I would say no less than every quarter, and then every 6 months or so, really have a sit down one-on-one opportunity meeting with your management company, meet them on property, walk the property, and get a feel for it. I don't recommend being an investor that says, hey, I'm investing in an asset at whatever city. I went to it one time and I haven't been back to it in 3 years. Pay attention to your asset, have eyes on the asset, make sure that you're walking those assets with your manager to justify, these expenses, and to have explanation on why is X, Y, and Z, because this could be for some the largest investment that you ever make. You need to make sure that this investment is being secured by not only a good organization, but the tenants that are there, the vendors that are, on the property. So there's so much that goes along with it, but it all goes back to aligning the expectations in the front end, understanding the goals, and understanding the current and any goals for future assets. The last thing that I'll say is communication. Communicate with your property manager. I love when my owners text me, email me, call me. You can text me on the weekend. I can't promise I'm going to get back to you as quick as I would on a Monday, but text me if it's a quick question, or if you see something, or you have a sense that, hey, just something's not vibing right. Let's put it on the table. Let's talk about it. Let's work through it. And it could be with the way that maybe we're doing things, because you're accustomed to processes based on your past experiences. So again, communicate, align the expectations. Let's work at the goals, and let's revisit them. Let's look at them on a quarterly basis. Let's get on property at least once every 6 months and walk through it and just have an overall assessment. So
Pay attention.
Yeah, that's what, we recommend owners look for in a PM. Now, what do we look for in an owner? That's a great question as well. We want to make sure that an owner's expectations are aligned with ours. So it's kind of the same thing, just reversed. I often ask the question, what are your expectations of us? What are your short and long-term goals of us as a management company? How would you like to communicate? What are your future, or what are our future, plans, growth, and everything like that? Now, are we going to be aligned throughout that entire process? The other thing that I always, want to make sure that people are aware of is make sure that the property management companies have, simple reporting tools, whether it's Appfolio, Yardi, whoever it may be. Make sure there's some kind of platform or portfolio that you can log into, view your financials, view your maintenance history, view your maintenance work orders, all those things, to make sure that they are being addressed, as it's being communicated. From an owner perspective, when we're looking at an owner, big ways that an owner can help us is proper documentation and data and history on the property. There is nothing more challenging than when you go to an owner or an investor and they say, hey, ABC Management was our last management company. I don't know if that really exists, but ABC was our last management company. They have all of our files, and you get one piece of paper and you're like, well, this is a rent roll. What are your past tenant ledgers? What are your vendor sheets? What are the invoices? And then you're just, it's an ongoing uphill battle to try and get things stabilized. So stabilization of a property, in my mind, is not just a steady cash flow, but it's also a steady relationship with the vendors, steady maintenance work orders, it's steady response time. So it's got to just be steady across the board. So, we look at that. We also want to make sure owners understand fair housing. That's very important. We cannot do things, and we will not. I've communicated this with owners and investors. I will not do anything that puts me or my staff in a position of liability for your asset. We are always going to, we're always going to protect ourselves with the tenants and with you in mind. But we're not going to do anything that's going to potentially, impact our business or your property in a negative way, because that's how you feel it should be done. That's, another kind of whole one-off conversation.
Yeah.
All things that we look at, you know what I mean? So
yeah, that's really good information. Thank you so much. I mean, that was a lot of knowledge you gave us, a lot of gold you gave us there. So I got a couple of things from there. So number one, owners listening, right? Maybe you're an owner, maybe you want to go into Baltimore. Maybe you have some assets in Baltimore and you're looking for a PM, and here he is, Keith, right? So
thank you.
The first thing I heard from you, Keith, is clarity, right? You got to be clear on your business plan. So we as owners can express that clearly. When you talk about expectations, we can express that clearly to you. Hey, this is what we want. This is, for instance, my group, right? Dr. Danielle and I, our group, we're syndicators. So we're syndicating deals. So we have investors that we report to quarterly, and we have to make distributions. So whenever we buy an asset, our property manager needs to know that. They need to be clear on that. They need to know that. And they need to be able to report, to give us those reports, so that we can just make the distributions accordingly to our investors. So that's key, having clarity. I'm always talking about clarity in this show, Keith, the importance of having clarity and communication. So I want to go into a little bit of what does the eviction process look like in Baltimore? So let's just say someone has an asset with you, or
Martin, are you there? Hey, Martin. Can you hear me?
Keith, I have no idea what this.
I have no. I'm sitting here and I'm like, wait a second. You froze, and then all of a sudden I was the host. So
yeah. So I gotta. What time is it? It is. Let me get my pen. Hold up. Let me stop.
You're good. Take your time.
Okay. So Keith, what does the eviction process look like currently in Baltimore? I know there's some restrictions, and we talked about that a little bit earlier. What can an investor that owns a property or wants you to manage a property expect in terms of turn time, right? The biggest expense for us real estate investors is turning a property.
Yeah.
So what can one expect in a city or with a management company like you to, from A to Z, evict someone, and then to get a new tenant in there? How long is that? That's a two-part question.
Yeah. So it's a great question. Unfortunately, there's going to be a lot of people lining up at the courthouses, it seems like, on August 31st to go ahead and file for failure to pays and evictions and everything else. And just, it's unfortunate because right now, so many people that were actually negatively impacted with the whole COVID thing, that were truly out of work, they couldn't make the rent, and they just, management companies have to follow the process in some instances. Kind of going back to what we talked about, not to veer off of your question, but communication. If we have a tenant that's making efforts and communicating with us and keeping us posted on everything, we're not going to go through that process with them. You know what I mean? We're going to go ahead and try and do what we can. Right now in the city of Baltimore, we're not allowed to assess any late fees. When renewals of actual new leases, we're not allowed to do any increases on rents right now. So everything's pretty locked down. The court system's open back up. They're projected to open back up on August 31st. At that time, I'm assuming there's going to be a very large influx of people filing failure to pays, and again, the eviction process. This is going to come at a really strange time, because if you really look at the eviction process, it's not a quick turnaround. Even in a normal, and I hate to say normal, pre-COVID situation, it was probably a 30 to 60, sometimes 90-day process to get somebody out the door from the time that you went through the eviction. So it's not a very quick process, but the issue that we're going to run into now is coming out of COVID. So many people are going to be, the courthouse is potentially going to be overwhelmed. So by the time that you can actually go through the eviction process, we're going to be running into the winter months. Once we're in the winter months, you are not able to do evictions if it's too cold, nasty weather, whatever it may be. They really rein a lot of that back. So in some instances, if you have a tenant that did not make any rent payments from April, there is a very, I hate to say a high likelihood, that there's a likelihood that this individual may not be getting evicted out of their unit until March, which means 1 year for an owner investor of having no income. So, and again, that's the worst case scenario that I'll kind of paint right now. But from an investor coming into Baltimore, whether you're with an organization, so it's any other management company that's out there, or you're with, a sole owner, you're buying a property as a one-off off-market deal, they were self-managing, I would stress and really dig into the approval criteria that they use when placing tenants into a property. Because what that's going to tell you is it's going to tell you, okay, a couple of things. If they have a screening criteria, they have a credit minimum, they do background checks, verification of income, tenancy verification, meaning they talk to past landlords and or management companies to verify that this tenant paid the rent on time. They were quiet, they were hopefully the dream tenant that everybody wants. That is going to greatly minimize, obviously, your potential for evictions. Now, that's very hard to do, especially in a city like Baltimore, because you have so many tenants that are students. You have so many tenants that are, working in the hospital systems, Johns Hopkins, different things like that, that they're only here for really, a couple of months out of the year while they're in their education programs, and they may go somewhere else. So, I guess, when you're investing into a property, you obviously want to look for long-term tenants, low
risk.
Yes, there you go. Low risk. So that's the only thing I would say on that is really dig into the past tenancy verification and the criteria that they use to place tenants.
I'm so glad you mentioned that because, I do a lot of teaching myself, not just through this podcast, but I also host a local real estate investors meetup here in Stroudsburg, Pennsylvania. And I have an online course, and I do a lot of educating and teaching investors, new investors, how to invest. And actually, one of my students is closing their first duplex on Monday.
Very cool.
A doctor awesome. And a partnership. They're closing their first deal, and I'm really excited for them. But one of the things that I always talk about, and I always teach my students, is when you're buying an asset, you need to make sure that you understand what you're getting, right? Yeah. So am I buying this asset? What kind of criterias and what kind of standards did they set prior to me picking up for these tenants, right? I want to know. Ask me how I know, Keith. I know.
How do you know, Martin?
Because
you went through it.
I've been there, made the mistakes, right? I made the mistakes, but people's words, and that's how you learn, right? Sometimes that's how you learn. So that's a great, amazing point that you bring up to understand, which leads to my next question. What does your team, your organization do to minimize that risk for us, right? What do you guys do to minimize that risk for us? Because, I tell my property manager here, my local property manager, I tell her, look, I'd rather be alone than in bad company. There's a saying in Spanish that says, "Es mejor estar solo que mal acompañado," which means that you're better off being alone than in bad company. And it's the same thing for us as investors. I don't want to just put someone in. I'd rather have a vacancy for 60 days than put someone in just to get some money, a quick turn. And then in 3 months, they're not paying me and they're trashing my place. And in 6 months, I got to spend another $3 or $4 grand. This is bad business. Turn to you. I'd rather wait a little longer, make sure I get the right person, screen the right people, and put the right person in there so I can have that long-term tenant. So what do you guys do to kind of curb that a little bit?
No, great question. I'm sorry that you had to go through that. I think I do hate to say, I think that's kind of a rite of passage to a certain degree for investing. Though everybody has to have that one bad experience, but it really starts with the approval criteria. Like I said, we look at things in really 4 different ways. But at the same time, if you said to us, Martin, said, Keith, you know what, I have an approval criteria that I've used for 10 years for all of my assets across the property, across the board in different cities, and it's worked. This is the way I want you to go. That's what we're going to use. So if anybody listening has something that they know that works, that is success, not just something, hey, I want to try X, Y, and Z, because that's kind of that throwing spaghetti on the wall and seeing what sticks. Not a good thing with an investment. We look at the credit. Credit can be variable. We don't really pay too much attention to credit because credit could be impacted by medical bills. It could be impacted by, student debt. And now there's so many people that have student debt out there, which is very fair to, if somebody has $100,000 in student debt and their credit score may be, 620, 630, somewhere in there, it's very hard to, and you have a 650, which is a very high credit limit. It's very hard to penalize somebody and say, hey, you know what, you're 30 points shy, but you also have $100,000 in student loans. We don't really look at that. We look at really bad debt. Our approval criteria is 575. And then you'd be surprised that we do have a fair number that are right on the threshold. And a lot of them are because of medical bills, student debt, different things like that. So we're going to work with them. We also verify employment. So we are going to ask for a pay stub. We want to make sure that your income, your annual income, is going to go ahead and meet your monthly rent. And we also take into account your average expenses for, bills, food, standard living, everything you need to live comfortably in a home. And we have open and honest conversations with people. Last thing I want to do is put somebody into a unit or have one of my team members put somebody in a unit because we've made this whole big glamorous thing. And we've stretched their employment and worked all these numbers, different ways to make it work. Where 2 months down the road, they're upside down and now we're fighting them with rent. It just creates a very adversarial relationship. So we want to tell people and be honest. Hey, you know what? Right now your income's a little shy, but we do have a property over here that's going to be more along the lines of what you can afford, and we think you're going to really enjoy this asset or this property. Typically, we'll refer to it as property for the tenants. We also do a background check, so criminal background. We want to make sure that we're not putting anybody into a property that's going to be of harm or potential harm to others. And then outside of that, we're looking at a tenancy verification. We're actually going to contact their past landlord. Hey, you know what? Martin was a resident with you. How did he do? Did he pay his rent on time? Was he having any disturbances? Nope, he was great. He had a podcast in his apartment. That's the only thing that anybody ever said they could hear him talking. Pretty easy. You know what I mean? We want to make sure that everything kind of, the systems, there's a checks and balances throughout the entire process. But outside of that, I mean, from an investing standpoint to how to avoid some of this, again, look back through, look at the leases. A lot of times just a lease in itself can tell you, the process that they followed and what kind of job they did with placing tenants. If you have a one-page piece of paper as a lease, you may want to kind of reevaluate that. You want to have some kind of protection for you, protection for the tenant. So many times tenants think that leases are just protection for the landlord or the management company, but there's a lot of things in leases that protect the tenants as well. So it should be understood that leases are there. The legal aspect of it is there to protect everybody involved. Because at the end of the day, the goal here is to provide a living space for an individual to come home to and to feel comfortable and to be safe in and everything else. The last thing you want to do is have somebody dreading coming to their own door that they're paying for. So create an environment, create a relationship with your management company, your tenants that is just, it's home. It is their home and it needs to be treated that way.
That's a great point. That's really, really good. That's an important and powerful message. Because that's our goal. That's me and Danielle's goal in my portfolio. That's my goal, is to give people a clean, safe, habitable place to live, right? If I provide that and I service you and I do a good job, then you pay my rents, and I run my numbers. Yeah.
It's amazing, and not to jump, but it's amazing how frequent you hear of that message not being understood, because you hear so many times. You can look on our website. We have it on there that we try and create a win-win-win situation for everybody. If it's a win for the landlord, it's a win for the management company, it's a win for the tenant. We can reverse that. If it's a win for the tenant, it's a win for the management company, it's a win for the landlord. We look at things in this the most non-adversarial way possible, because so many times tenants feel, I'm paying Martin $1,200 a month and I don't ever see any improvements to my I'm just giving him my money and his pockets are getting bigger and he's probably on a beach somewhere. But if you're putting back into the property, little things, painting common areas, updating floors, maybe having an appreciation day for tenants, give your management company, hey, here's $1,000, have a big barbecue or something for the tenants there. Let them know that they're appreciated. That stuff just speaks volumes. And from an investor standpoint, to really stabilize a property, give back a little bit, do a little bit extra. It's going to be received by the tenants. They're going to be recognized. Maybe it's free internet. Something so simple is going to, it's really going to elevate your whole experience in investing, in my opinion.
Retention, man. Those little things improve retention and retention. Oh, yeah. And we said it earlier, turning an apartment is the most expensive thing in our in our business. And if we can figure out and do little things like that to keep people long term,
Yep.
man, that's where wealth is created. That's where we all make money, Keith. You as a PM, it's a smooth sailing boat for you.
Yep.
It's smooth for us. It's smooth for our investors. Everyone, the cash flows coming in. Everyone win, just like you said, Keith.
Yep. The best investors are the ones that we never hear from, because if I don't ever hear from you, that means you're happy. It means the tenants are. So sometimes, I preach communication, but sometimes no communication, no news is good news. We'll go back to the old saying.
It's good, yeah. So my other question is, sir, what are some of the threats? One of my final questions is, what are some of the threats and some of the opportunities that you see in Baltimore, Baltimore City? Some of the threats and opportunities within real estate?
Yeah, no, great question. I mean, we can look at threats in so many different ways. And right now, I think it's a very strong time to invest just in general. Rates are great. There's a lot of positivity and there's a lot of investor-friendly things going on. Some of the threats that are just surrounding the industry as a whole are restrictions that they're putting on landlords. And this is coming back to the political aspect. There are talks of certain things being put in place as far as rent restrictions, certain limitations that landlords can do. So that's always a risk. And that's something that, organizations like MMHA are always going to fight on behalf of the landlords. So you do have a support system. They're going to lobby. They're going to do different things like that to make sure that the landlords are protected, but also the tenants are protected. In Baltimore in general, there's a lot of opportunity zones. I think the opportunity zones are great once they come to fruition. And that's, the big risk of investing in any area. You have opportunity zones where the goal is to revitalize an area, bring back jobs, bring back this, trying to recreate this neighborhood for what it once was. If you're ahead of that curve, it's going to be a home run. From my experience, and this is my personal belief, so, for anybody listening, this is my personal feelings on this. Some of these opportunity zones, it's a stretch in my personal opinion. I feel like there's going to be some zones that they're identifying as opportunity zones that there needs to be a lot.
Can you hold up 1 second?
Yeah, go ahead.
Hold up 1 second, bro. Go ahead, Keith. Sorry about that.
So on the opportunity zones, again, my belief on this is some of these opportunity zones are hot areas. They're going to be great opportunity zones if the things come to fruition. There's some areas that have been identified as opportunity zones that I think are very much a stretch. If you have an investor group or a large investor group that's going to come in and look to buy blocks of property in a large area and really do some things, I think you're going to see some change. One of my, anytime somebody's like, hey, I have an opportunity zone, if you will, I want to look at the area. I want to look at the surrounding areas. I want to look at, is this a pocket going to be revitalized, and are the surrounding neighborhoods going to support that? Because if they're going to support that, I'm going to tell you, just like we went and looked at that one asset, it's not a good investment. If you're looking at an asset that is falling apart, decrepit, leaking, and it's going to be a maintenance nightmare, I'm going to tell you, do not do this, regardless of the opportunity. And that's some of the things with Baltimore and some areas that properties have been so neglected for so many years. It's almost the point of, okay, how do you correct this? How do you restabilize this? And honestly, you're better off just kind of leveling them and building up ground up. But that, then you're jumping through a whole nother set of hoops. So there's some of the threats that I see, taxes, water, different things like that. Obviously, that's a threat that you're always going to experience. Make sure you're looking at the financials of all your assets or any of your investment. Really go through your diligence period. It's kind of what I see from a personal experience in Baltimore with the management side of things. As far as opportunities and the positive, there are a ton of areas. I mean, if you look at anybody listening is from Baltimore, if you think back in the Canton area or the Federal Hill area, Fells Point area, Brewers Hill, those areas 10 years ago to where they are today are completely different. I mean, talk about now there's Targets, Whole Foods, Wegmans. I mean, there's a whole bunch of things down in these areas that completely changed 10, 15 years ago to where they are today. So Baltimore has the areas. And if you can invest and find a partner that's going to put you in the right areas as far as a broker, whoever it may be, that's where you're going to experience wealth and a solid investment, in my opinion. So don't buy something that's, falling down decrepit. Find something that middle of the road that's right on the outskirts, that next trending area. That would be my best advice that I could give to anybody looking to come into Baltimore.
That's perfect, man. Thank you so much, Keith. Let's do this again. We need to do this again. Guys, if you're out there listening and people want to get a hold of you, Keith, how does someone get a hold of you to maybe bring you on, or they want to buy some assets out there, or they have some assets in the Baltimore market, and they're listening to you and they're saying, man, that guy's sharp. I really need to bring Keith on as my PM. What are you looking for? What type of properties you're looking for, and how do people get a hold of you?
Yeah, great question. So anybody that's looking to invest that's not working with anybody, we have a very extensive network of brokers that we work with, and brokers from all asset sizes. So if you're looking from a 2-unit to a 100-unit, we have a couple brokers that we can point you to. 100 units plus, we have a couple of brokers that we can point you to. We have great relationships with everybody. So if anybody is looking for properties, please connect me or contact me, and we can certainly get you in touch with the right individuals. As far as from a management perspective, let's talk. We're flexible. If you're looking for a duplex, but you also have aspirations to continue buying, we're going to help you out with that. If you say, hey, I'm going to buy a 10-unit property, and we're going to park it there, we'll help you out with that. Big garden style apartments, that's where we came from historically. So I don't want to just sound like we're taking any low-hanging fruit off the tree, but we're here to partner with you and throughout your future goals. If you need to get a hold of us, you can certainly contact me directly. I can give you my number, Martin, or give everybody my number. It's area code 443-570-4478. That is my cell. So please feel free to call, text, let me know that you heard us on the podcast today. And then we can also reach us on our website, which is www.horizon, HORIZON, property, PROPERTY, MGMT.com. So Horizon Property MGMT.com. Go there. There's an owner's link. You can go ahead and submit a request for somebody to reach out to you. You can explore our current assets, future assets coming on board, see the team, get a little bit of a feel for the website and the organization.
Okay, perfect. Any social media links or anything like that?
We have Facebook, LinkedIn as well. So you can search for us on Facebook and LinkedIn. We're actually getting ready to do a whole new rebranding. And I'm just losing it today. But campaign, excuse me. Rebranding campaign. So once we have that up, we're going to have some different things as far as social media. I know a lot of people are looking at Instagram, Snapchat, and that's something I'd love to talk to anybody about, as well as, what is this new generation? When I say new generation, your renters in some of these areas, what are the resources that they're looking at for to find out properties are available? It's not so much the Craigslist anymore or the apartments.com. People are starting to find stuff on Instagram, Snapchat, believe it or not. So there's a lot of different marketing tools that we want to talk to you about as well. But how do we get exposure to your property, and how do we make sure your vacancy rate stays high, your vacancy rate stays low, and your occupied stays high. So.
Yep. All right, brother. Thank you so much, guys. Thank you for listening. If you appreciate it and you found value in this show, please leave us a review in the comments. Just to, give us a 5-star review. Leave us your comments. Tell us what you think. We really appreciate that. It really helps with the algorithms and you listening to Latinos in Real Estate Investing podcast. Thank you again for listening. And Keith, thank you very much, sir. Really appreciate it.
Absolutely, Martin. Thank you very much. Really appreciate you and everybody's time. Thanks so much.
All right.